Hey everyone, it's Ryan, and in this video, I'm going to be showing you how we go about setting up a policy, an IUL cash value life insurance policy, specifically for infinite banking. Now, the biggest difference when structuring an IUL for infinite banking is simply just making sure that we give the client the minimum face value and the maximum accumulation. Essentially, all that means is that we need to give the client the minimum amount of death benefit coverage as possible. And the way that we calculate that is that when we're structuring the policy, we just structure it as a minimum non-MEC. The reason why we want the policy to be non-MEC is because we do not want the policy to ever become a modified endowment contract, which essentially just means that it's losing its ability to earn interest tax-free with zero market risk and all of that. Because essentially what's happening is that in the eyes of the IRS, they're not viewing the IUL as a cash value life insurance policy anymore. They're actually looking at it as more of like an investment vehicle, because if it's a non-MEC, or if it is a MEC, if it is a modified endowment contract, essentially what's happening is that you do not have enough corresponding death benefit in correlation to the amount of money in which you've put into the policy. So for the policy to be considered a life insurance policy, you must have a certain amount of death benefit coverage correlated to the amount of money in which you have in the policy. So essentially what this does is it allows for, let's just say 90% of the premiums you're paying in to go towards cash value, and then the other 10% just goes towards like the actual cost of the insurance and the other like 3 fees that go along with having an IUL. And so what this does is that once you see the accumulated value and the cash value, you'll notice that when the policy is structured as a minimum non-MEC, the number in year one in the cash value is substantially higher than what it would be if somebody did not structure it as a minimum non-MEC. If you ever hear people say, you can't take loans out of an IUL for like 7 or 10 or 15 years, or you know, whatever it may be, something along those lines, just understand that that individual either A, has no idea how one would structure a minimum non-MEC policy, or 2, they were just told to say that and they heard somebody else say that and they're just repeating it. Because a lot of our clients who come to us specifically want their IUL to be structured with a minimum non-MEC because, you know, they're venture capitalists, they're private money lenders, they're real estate investors, and they want to throw that cash into the IUL and they want to borrow that money as fast as possible so that they can go reinvest that premium that they paid into the policy into other income producing assets so that they can scale their real estate portfolios, or they can, you know, scale the efficiency, or they can go ahead and actually invest in other businesses if they're a venture capitalist, smarter, faster, safer, all those things. So if you have an IUL already and you want to know whether or not it is structured properly and if it's a minimum non-MEC for infinite banking, book a call with us. If you are someone who's looking to get an IUL properly structured specifically for the infinite banking concept or to become your own bank, then just use the link below this video to go ahead and schedule a one-on-one with myself and my team.